Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, March 15th. We are halfway through the week and a day removed from the highly anticipated CPI print that dropped yesterday. Prices are coming off of their highs a bit in terms of all risk markets, and no surprise here in relation to risk markets coming down. DXY has risen. So when we discussed yesterday, we were hovering, right around the 103.6 level. I mentioned if that level held, it would probably be bad for risk. And if it failed, obviously it would be good for risk. So we got a pretty large green candle that pretty much, succumbed the entire range in one single candle. Haven't seen that in several days, and clearly, like I said before, it is affecting price action. We tipped just into this demand zone, which has been a rejection or a deviation every time it's popped in here. Dating all the way back to early January. So something to continue to watch out for, but. This is starting to look a little bit stronger. A failure, here would have definitely probably drawn us down to 101 and helped risk flourish. And now it is obviously back near the demand zone. So I'm not saying that, if you've been calling for breakouts in either direction, you've obviously been wrong for the past several weeks. And I'm not going to make that mistake, but very similar to yesterday, if you are longing or you think you should short risk, if you are longing DXY and should short risk at this level, well, on the reciprocal yesterday, if you were longing risk and shorting DXY, here, you would have obviously failed because it held at support. So now we're at resistance, and I would not be trading overtly bearishly with this with DXY looking the way it does. What I would wait for is several hours to see how it reacts in this demand zone, and how, of course, risk reacts to the support levels that we're going to define in a second. So no real signal here, but basically the main signal has been, if it gets into this area, you long risk. If it gets into this area, you short risk. And so until that changes, that's been the market pattern. So looking at equities, I take a lot of issue with this chart in terms of anyone saying bullish things. And especially if DXY does continue to inch into this demand zone or hold around this level, it could certainly still allow for some bearishness from risk. So we basically defined this, we defined 39.25 as resistance, and it was set as resistance by multiple wicks at this level, as well as the low from the 1st of March. And we obviously dipped all the way down to 38.08, and we have, support really all the way down to 37.70, and 37.80. So in my opinion, if 38.50 breaks, a confirmed break, and it is looking more likely than not, considering this candle is going to close in an hour and a half, so still have about 90 minutes left, or 80 minutes, I should say, until this closes. But a close below 38.50 is bearish in my opinion, and will likely send us down to at least 38.08, which is the recent low from Monday, and potentially down to 37.80 or 37.70, which are the lows from December. So those are basically equal lows that have been untapped, so to speak. And so you would expect them to be tapped, especially given the general formation we're in. Whether or not it dips lower is, of course, a larger question for the market. But we have June lows, down here at 36.40. And then we have our October lows all the way down here at 30. What number is that? 34.95. And then I'll go ahead and just draw another kind of, because you see all these flat candle bodies. So this is kind of the a bit of the range that we would probably dip into. Probably move that down a little bit. Yeah. So there's your range right here for if we ended up getting below 36.40. So not saying that I'm expecting this level to drop. I'm just saying if it does, these are your support levels. You've got support at 36.45, you've got support at 35.75, and you've got support at 3,500. But if we do end up making it to 37.80, 37.70, I would expect something like this. Maybe we dip down and then we deviate back up, and then, you know, we make a play higher, or then something like this ends up failing. So that's what I would expect from equities. You know, if we do end up making it down, you know, lower to the equal lows from December. So something to watch out for there. And then, of course, you know, if we do close above 38.50, you know, let's think about the bullish area. So let's go ahead and kind of draw a line at 38.50 to give you a better idea. And then if we can get, basically, if you can do something like this, that's highly possible. We also have, you know, kind of the mid range as well, which is important to define. So, you know, if we did deviate back above 38.50, I would say your first level of resistance would be 38.85, and then you would either get rejected here or obviously, you know, continue higher to reattack 39.25. So, but you know, in my opinion, if it gunned to my head right now, I would say we probably close below 38.50 would be my opinion if you had to force me to make a bet right at this second. But you know, in the sense of typically how we trade, you know, if you wanted to take this long, you know, I'd wait for the 38.50 confirmation, and if you wanted to take another trade, you could certainly, you know, if this confirms underneath 38.50, you could take that short down here. And then you could also wait till it, you know, tags 38.08 or down here, and then you could take the long off of this low. So I would only long if we get a confirmed break up here. I would short if we confirm close below here. And I would look for longs. I wouldn't just enter them, but I would look for swing failure pattern or some buying interest around 37.85 for a potential long up to, you know, basically 38.50 or just below it. So some trade ideas for equities today. Looking at Bitcoin, you know, for me, this is, you know, the immediate things that I'm seeing on this chart are deviation above previous resistance. So 25K was resistance. We put a 4-hour candle there and then pretty much immediately slid back down. We're now hovering around 24K resistance. So, you know, it was the top of where we traded on March 1st. It's obvious also the bottom or the low of where we traded yesterday, right at 24K. So 24K basically needs to hold, else you are seeping down into 23.3. And if you dip down to 23.3, you know, your momentum for any bullish continuation gets a lot more trickier. And I think, you know, your momentum for any bullish continuation really starts to get hairy at 23.3. Anything below that, you'll probably start to see a lot of shorts open up. I think honestly, anything below 24K, you'll probably see a lot of shorts open up. But below 23.3, it's going to get very hairy. So 24K, you either hold 24K or you drop below 24K. 23.3 obviously supports. If you can hold 24K, your resistance would be 24.6 or 25 flat. If you can get above 25K, then obviously your recent highs, you know, that 26.4, potentially as high as 26.6 would be your resistance. And of course, if you get below 23.3, we have, you know, a nice little demand zone right here between 22.4 and 22.7. So if we did end up getting below 24K, I would expect probably, you know, dipping into near this level before rising again. And I think you'll probably see that action coincide with the 4-hour estimated moving average. Right now, we are above the VWAP, the weekly VWAP, which, as we know, is a very important indicator. And, you know, basically all of the previous week we're trading under it. Now we're above it. So we basically want to stay above it. It also coincides with the 24K support. So if you think that 24K will hold and the VWAP will hold, not the worst long opportunity to try and reattack at least not the exact recent highs, but, you know, the 25K highs or 24.9 highs. So potential opportunity there. And of course, like I said, if it breaks, may see a long opportunity at 23.3, but I would probably look for a little bit more longs around the 22.5, 22.6 level. So looking at Ethereum, you know, very similar to Bitcoin. I'll go ahead and zoom out a little bit. You know, support resistance was very clear early this morning, you know, after the open, obviously sliced below it. So very much looking like deviation as well. Recent highs, you know, were 1730, deviated up, deviated back down, closed within the range, and are just slicing through supports right now. So we sliced through 1650 supports. Looks like we'll probably close beneath it. Next level of support is 1600. So, you know, do this, you know, maybe along at 1600, drop below that, you're down to 1530. And then I would expect to see a lot of interest if we ended up trading down here, which is, the lows from February. We obviously have deeper lows from earlier in March, but a lot of trading interest, in this, in these two windows right here. Based on how we traded in January, in February, we obviously did slice through it in March, but we quickly got bought back up, had some ranging around these areas, and then sliced back through it. So if we did reach this level, considering we barely traded here in March, I would probably expect us to laser down to 1480, below 1500 in this area. But I would assume you'd probably start to see some buying interest, here or in here, if we were to get below 1600. So 1500 to 1600, I think you'll probably see a lot of buy interest. And then of course, if 1475 ends up failing, then things get quite hairy yet again, and we'd want to see very similar buying interest to what we saw here. Without these immediate reactions, you don't get this type of momentum. So that's very much what we want to see. Kind of, also, smaller version of this formation was obviously mid-February. So right now the charts aren't looking beautiful, but I think, if you're shorting, it's the same thing as if you're longing resistance. If you're shorting supports with the same vigor that you're longing resistance, you're definitely, losing trades. And that's why we always say wait for resistance to confirm break before entering a long trade in that fashion. So if you're just shorting indiscriminately down here, I have a feeling that you'll probably face some volatility and some chop that'll hurt your value of the trade. And of course, if you're longing here, we could certainly still see a little bit more downside. So it's not the cleanest long. So where we're at right now for ETH is I would probably look for 1600 tap, or or if we get a nice swing failure close pattern that looks like it's going to reattack 1650, then maybe you re-enter if we can get a close above 1630. And for Bitcoin, I wouldn't just short 24K, considering we're right around the VWAP and its confluence of technical supports. But I would wait for that confirmation below 24K to short down lower. And of course, if we close above the VWAP on the 4-hour and get a nice little confirmation candle where it's lifting higher off of the VWAP, then maybe that's a good long to at least 24.9 or 25K, maybe cut some and then try and ride it higher if it goes. So, this is going to be, very difficult trading. I think the easiness came, from the CPI trade. That was probably the easiest trade of the week. We got a bunch of information telegraphed. CPI was good. Prices went higher. So now, if you didn't short the top, it's probably better to wait to see how we react at this support level, because this support level could represent a few good longs. Or if support level breaks, then you have obvious shorts to continue to attack. So, I would exercise patience today. There's still a lot of information that the market's working through in relation to quote unquote banking crisis, Credit Suisse woes. Saw First Republic was downgraded, Credit Suisse was downgraded. So there's a lot of negative market. There's a negative narrative floating around right now. And I wouldn't exactly trade against that, but knowing when, even though price is macro driven, news driven, technicals are still very obvious in terms of where you long supports and where you short resistance. And so if you continue to play it in that fashion, understand macro technicals for general movements, but your entries and exits are based on technical analysis. That's how you should probably approach this. And right now we're at support. There's no reason to overzealously shorts. If you want to look for more shorts, look for, again, the confirmed break in supports, or add more shorts at resistance levels of where we traded previously, where price was rejected. So that would be my best advice for you today. Don't overextend yourself. If you won Monday and Tuesday, don't give it all back Wednesday and Thursday. So good luck. Happy trading. See everybody tomorrow.